If you're looking to buy Nikola Motor stock, then keep watching this video because we're going to look at the company's recent news, the market's trends, as well as the technicals. As the market remains volatile, we should always be mindful of which positions to pick, as well as their individual timing and exposure. Before the video begins, if you would like to see more stock analysis videos like this one, please remember to like, comment, and subscribe to my channel. Over the past few days, Nikola has been able to reach a region between $1.50 and $1.75, which is clearly a big win for a company like this on many fronts. First of all, it guarantees their continued listing on the Nasdaq and their ability to raise capital from one of the deepest capital pools in the world. Nkla has also been one of the worst affected by the scandal involving the founder and former CEO Trevor Milton, whereby investors were misled to believe that a working truck was powered by an engine, whereas it was simply powered by the gravity and the slope of a mountain. To be fair, it's not something that many people would necessarily find morally wrong if it were clearly, outlined that it's a proof of concept or a proof of design, except they marketed it as a working product with batteries and engines that are working as advertised. This is what triggered the initial investigation a few years ago, and it started by Hindenburg. So many people consider that Nikola would never going to be able to climb back from this crisis. And personally, I also believe this. Except over the past few years, Nikola has actually managed to keep up its production timeline and to eventually roll out actual products, and almost managed to stay head and shoulders above many other companies in the same niche. Going forward, I think that Nikola would be able to maintain a mostly positive sentiment and to eventually develop its operations into what they're supposed to be. With that being said, let's take a look at the technicals. The trading volume of Nikola has recently been around 71 million shares versus the average volume of 108 million shares. Over the previous 52 weeks period, the price fluctuated between 52 cents and $3.97. The volume of shares traded tells us how many shares are being bought and sold at any point in time. If there's enough liquidity to support such a trading strategy, and if the float is very thin, it's going to be easy to influence the stock price. But the low liquidity could mean that the demand is limited as well. When we compare the current volume against the average volume, there might be, there might be the possibility of a trend reversal or the breakthrough if the difference is large. For instance, if the stock were to break through, the current volume would be significantly higher than the average volume. Now, the market cap of Nikola is around $1.2 billion compared to the enterprise value of $780 million. In other words, there's still quite a bit chunk of premium for a stock like this. As we compare the current price to the historical price fluctuations, the stock is 102% higher than the 1-month low, 102% higher than the 3-month low, and 217% higher than the 52 weeks low. On the options market, which often gives us a hint on the market sentiment about where the stock price is going to go next, the implied volatility is 150% versus the historical volatility of 170%. The put-call volume ratio is currently at 81%. It's normal for many stocks to have a higher put option volume than what they deserve, because many institutional investors hedge their long positions by buying put options. The most recent volume of options traded is 54,000 contracts a day versus the 30-day average volume of 122,000. In terms of open interest, the most recent volume of open interest is 2.2 million contracts versus the 30-day average of 2.2 million contracts. Regarding the shareholder structure, institutional shareholders own 20% of the outstanding shares. The biggest shareholders include BlackRock, Vanguard, and Citigroup. Typically, it's always good to see some institutional participation when holding a stock long term. It offers a layer of stability and a token of reliability in the medium to long term. It means that the market is confident that it will eventually deliver even more value in the long term, which is an important factor to consider for investors. I believe that a minimum threshold is around 30% for institutional ownership for long term trust. Now, with that being said, let's also move on to the short interest. The current short interest is around 22% of the total float, and 46% of the transactions come out from the dark pools. Usually, if the short interest is above 15% of the total volume and a significant portion of the shorts come from the dark pools, there could be arguments for a potential short squeeze. And in this case, there might be one. With that being said, when it comes to Nikola, let's remember that when it comes to short squeezes or short squeeze speculations, it's never a guarantee. That's to put it. So right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk-return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far-reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflations. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions instead of choosing ETFs. My recommendation for Nikola is to make sure that you have a small existing position in the stock and to hold on to the capital to purchase within the next few weeks due to the current momentum that is going on. I would recommend to commit overall 0.5 to 1% of your portfolio in Nikola.